Yep, it's Fed Day, and he sure looks excited over there. So we know the Federal Reserve is going to cut rates today, but you're here because you're trying to figure out what you should do. Maybe you're a homeowner, maybe you're a home buyer, maybe you're a realtor, loan officer, trying to explain this to your clients. So today we're going to talk about what the Federal Reserve is going to do. We know what they're going to do because in 5 hours, they're going to come in, and the likelihood of them cutting rates is at about 90%. So just because the Federal Reserve is cutting rates this time doesn't mean mortgage rates are going to drop. So we're talking rates today. We're going to talk about what the Federal Reserve is going to do and how those might really not change mortgage rates at all, folks. My name is Dan Frio. My whole goal each day is to come in and explain to you guys what the heck's going on with mortgage rates and the whys behind it. Today's news is the Fed and nothing but the Fed. So here's what we're looking at. Here's the news that the Federal Reserve watches. Okay, they watch the PCE. That number just came out recently, and it's the inflation number. Okay, it's way above the 2% mark. The unemployment rate, it's 4.4, and the JOLT numbers yesterday aren't looking any better for these things. So the unemployment rate may be ticking up a little bit more based on that news yesterday. So the Federal Reserve, they're cutting rates, but inflation's up, and the employment numbers aren't really falling off a cliff. So are rates really these cuts really gonna change mortgage rates? Well, mortgage rates are most focused in on those things down there. The inflation's high, employment rate's still under 5, that's full employment, and that's right through here. This is one of the biggest things that really controls the long end of the bond market, which really controls mortgage rates. A little bit confused on this. Let me explain this to you. If you're new to my channel, here's what we really follow to figure out what's going on with mortgage rates. Right through there. That's a mortgage bond. If you see at the top up there, it says MBS 5.5. What you have to look at is what the price is doing. Okay, so here's what I mean. If the price up there is going up, that means rates are coming down. We want this to rally up. But the Federal Reserve cut rates last September. This is just the previous September. It's right through here. The number that when they cut was 101. Here, I wrote it down. 101.3. It was right there. 101.25 to 101.445. Okay, that's the price of the bond. I'm getting somewhere. If you look at it today, right up through there, 101.75. Okay, that means it's lower. So the bond price is down from where we were. Well, remember, if bond prices go down, rates go up. Well, that's what happened. So the Federal Reserve cuts and mortgage rates go up. Why? Well, because they're looking at things like this. They're looking at the inflation numbers. They're still higher than 2%. They're looking at the unemployment rate. They're still under 5%. So they're saying, okay, the inflation's too high. The jobs market's okay. Do we really need to cut? Well, they're kind of being forced into this rate cut, but that doesn't really mean that mortgage rates are going to be forced into coming down lower because inflation's not coming down. The jobs market isn't really getting any better, and our national debt just keeps getting worse and worse and worse. So now the other pieces of this puzzle we have to look at are tariffs. Are they going to be deemed legal or illegal? All these things play a role in what goes on with your mortgage rate. So let's get over to today. Here's what I want to start publishing for you guys. Mortgage rates that really make sense to you guys out there. So if you watch my channel each day, your whole concern is what's going on with those and why. Okay, so if you're a homeowner right now, what should you do? We know the Federal Reserve is going to cut, but where are rates going to go from there? We've seen the last 5 times they cut, mortgage rates went up. So I have a tool for you. If you're a homeowner, just go over to here, RateWatch 2.0. Plug in the rate that you'd be interested in refinancing. I'll call you. We'll go through what the numbers look like, and if it works out, we'll lock in and get you moving forward. But wonder if you're a homeowner right now or a home buyer right now, trying to look maybe to buy in the spring, maybe look to buy down the road next year. Hold tight. Okay, so here's what's going to happen. I'll give you the playbook for today and maybe the next couple weeks. The Fed's going to come out and they're going to cut rates, but they're going to have a conference, and we're going to be live today, so join me live on that. And I'm going to show you the market reactions as the people ask the federal chairman questions, and he'll probably do this. As they ask him questions, it's going to fill a lot of gaps in. And then we're going to get really details on how the meeting in the background went with all the Fed officials. Once that comes out, and also they're coming out with their dot plot today. What their dot plot is let's get over through here. Here's the dot plot that they give us, and they do this 4 times a year. They go down through here, and if you go to the table, this is a dot plot that they create right through here. And what this is members of the Federal Reserve who have voting rights, they put a dot where they think the federal funds rate will be in 2026. Well, this is what it was So later today, we're going to go over what the new one looks like, and then that'll give us much more direction on where the Federal Reserve expects to do in 2026. Are they going to continue to cut? Is this going to flatten out? Or are they going to cut more than we think? So those are all the things that we're going to see in the background today once the Federal Reserve does it. So the playbook is today, the Federal Reserve, they will be cutting rates, and then the markets will react, and then we're going to see the conference come on, then the markets are really going to react. Then what I like to do is kind of let the smoke settle. And then everybody analyzes all the data that the Federal Reserve has given us. And then tomorrow, the markets really start to stabilize on new data that's coming in. If we go to the economic calendar today, I don't know if I brought that up, but tomorrow we're going to get more jobs reports numbers and more data that the Federal Reserve really focuses in on. So even though the Fed cuts today, you have to continue to monitor things day after day after day if you're in this business or you're trying to monitor mortgage rates. So subscribe to my channel over there. So every day I post a video, you can check out and see if it's something of interest to you and check out and go ahead and visit that. But the reason why I do this, folks, is I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. I'd love to help work with you and navigate you through maybe home ownership or how do you really refinance your house. So the unique thing here is I have a slogan. It's one application, one credit pool. We're going to compare your loan and rates with over 30 different lenders. How do we do that? Well, our bank is set up with over 30 other banks, credit unions, and mortgage lenders that we can offer you their services, basically their rates, their programs, and we can do it right through using me, yours truly, during this whole process. So folks, that's it for this afternoon or this morning. I will be back here live after the Federal Reserve announces what they're going to do to show you the instant market reactions to these things and more. So join me then, and then I will be back with the closing bell to wrap this all up, and we'll see where the markets go and take us from here. But my expectations are the markets are going to be completely flat until the Federal Reserve does what they're going to do, and they're going to cut. But then it's that verbiage afterwards that's really going to have the markets reacting. So join me live. I'll see you then, folks. Take care. Bye-bye.